Relative to the market, I'm more cautious on the current tariff standoff between China and the US. I expect both countries to negotiate with each other. We are likely to see hard bargains being driven at both ends, which could last for at least a few quarters going forward. Nevertheless, consumption has replaced traditional growth drivers, such as export and investment, and has emerged as China's new growth engine. Consumption has been the largest contributor to China's GDP growth over recent years, and this is expected to continue in the years ahead. More importantly, the Chinese government is expected to introduce more fiscal and monetary loosening policies to support the growth of the Chinese economy and the consumer sector amid rising macroeconomic headwinds. China's consumption upgrades have translated into shifting spending patterns with more, first, attention on health and happiness, second, consumption of services, and third, product and service upgrades. Chinese consumers, especially the younger generations, are paying increasing attention to quality of life issues. Riding on the consumption upgrade trend, we believe that selected industries such as e-commerce, education, healthcare, travel, and gaming will be the key beneficiaries of this shift in spending. As a bottom-up stock picker, I believe an uncertain macro environment is often one where investors can pick up great companies at attractive valuations. Within our China Consumer Fund, I continue to focus on areas that can deliver sustainable growth in the next 3 to 5 years. I maintain an overweight stance in new China sectors, as they are less sensitive to short-term macro headwinds. In particular, I will remain biased towards pharmaceuticals, consumer staples, and ABC companies, which are companies engaged in artificial intelligence or AI, big data, and cloud business.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书或投资人须知。